Okay, as part of maths and small business, we have to look at different ways you can set up a business. So we're going to look at some business structures. These are quite simplistic, but as far as the course goes, you just kind of need to know how these roll. So let's have a bit of a squiz. You've got kind of three areas that we look at. One's for sole trader, the other one's a partnership, and then a company. You would have touched on companies and shares, but the partnerships and sole traders might be new to you. So when you do a partnership or a sole trader, this is the kind of how it works. For a sole trader, the interesting thing is it's obviously sole trader. There's can only be one person. Okay, that's pretty easy. The partnerships can be 2 up to 20. So these could be like a small business or something like that. So these can be a small business where you've got a partnership set up within that business. Now, it doesn't have to mean that you own half the business each. You can have different percentages of the split up. So you might have someone being 60-40 or 30-70 or 30-30-30 and 10 or whatever. But you can split the percentages of the ownership up. The last one is a company. Now this is very similar, it's exactly like stocks and shares, where a company's got to have a board of directors, these guys here, and then these people manage the whole company for you, and then you sell parts of it to be able to get shares. So you float the company on the share market and you have shares in the company and stuff. The taxation stuff with companies are quite complex, so we only really look at it very lightly, and we don't really touch on too much with companies because it gets really quite busy, and you actually give over the ownership to the board of directors on those companies. So they're the three things: sole trader, partnership, and company. Now, how does tax work with that? Well, when we do tax, if you're an individual, you get taxed. You get the first $18,200 is tax free. This bit here, $18,200 is tax free, and what this means is that this is your tax free threshold. Okay, so it's a tax free threshold, which means that you can own, or you can earn, $18,200 before you get taxed on it. If you've got a part-time job, you might have tax being taken out of your pay as you go, but they don't know how much you're being taxed over the whole year. So they just take out their prescribed amount of tax, and at the end of the financial year, you put in a tax return, and if you've earned under $18,200, they'll take you'll get all that money back. We don't operate in Australia on a flat tax rate of tax. It's actually a bit of a sliding scale, and we'll have a look at how that works next, so you kind of get your head around how it goes. And also in Australia as well, we have a Medicare levy, and this is a percentage of your wage that goes to the government and pays for our medical stuff. So that's why you can go to a public hospital and get treated for things. Okay, so it's called the Medicare levy, and everyone pays towards that. So let's look at how tax is actually calculated here. So let's kind of, if you can picture that we have like one of those cylinders that you have in science, and you fill it up with water or whatever, and as you get close to the top, the water fills it up. Along the side here, along this bit here, we have dollar values. So this is how much you earn. So the white numbers is how much money you're actually earning in that. Okay, the green numbers is how much tax you pay in those brackets. So between $0 and 18,200, you pay no cents in the dollar. For money that falls between 18,200 and 37,000, you pay 19 cents for every dollar that falls within that. Then, if you go above 37,000, anything that goes in the 37,000 to the 80,000 range, you pay 32.5 cents. You don't pay 32.5 cents on the whole lot. Here, you only pay 32.5 cents per dollar for any bit that falls in there. And the same goes for here. Anything between 80,000 and 180,000, you pay 37 cents in a dollar. So as you go up, you're paying tax through that bracket, tax through this bracket here, and tax through this bracket here. So as the water fills up in there, you're paying more tax as you go. So if you imagine the water's going up to here, at that stage you're paying no tax, okay, because you're under the 18,200, which is the tax-free threshold. Once you get up over here, any money that's in this bit here now, between here and here, you pay 19 cents in a dollar for. Okay, you don't pay any more. You don't pay any money on the tax on the bottom bit here. You only pay tax on the bit that's in there. So as we go moving up, we keep on getting more and more money into different categories. So it's really important to remember that as you go zipping up here, make out we get up around here, so $85,000 is your income, you only pay 19 cents on the dollar for the money that falls in this bracket here. Then in this bracket here, you pay 32.5 cents on the dollar, and for the little gap between here and here, whatever that might be, it's 37 cents in the dollar. Okay, so you've just got to realize that you don't keep on. So when people say, oh, I've got a pay rise up higher, I'm losing all my money and I'm losing half my income in tax. It's not quite true, because you pay on this sliding the scale that starts at 0 and goes up, and you pay the money that goes through the bracket. In the next screencast that looks at how you actually calculate the tax, you'll be shown a way of actually calculating tax, which is pretty easy to do and works all the time.